Imagine waking up tomorrow to headlines screaming, "This stock is going to $500." Within minutes, millions of people rush to buy. Social media explodes. Financial influencers celebrate. Fear turns into greed, and greed turns into obsession. But hidden beneath the excitement is one terrifying question almost nobody is asking. What if everyone is chasing the same dream for completely different reasons? It always starts with a story, not numbers, not charts, stories. Somewhere, an investor looks at a company that everyone else is ignoring. The stock sits quietly, barely making headlines. Wall Street doesn't seem interested. Television analysts barely mention it. To most people, it's just another ticker on the screen. But to a small group of believers, it looks like the opportunity of a lifetime. They whisper the same sentence over and over. One day, this stock will reach $500. At first, nobody listens. But history has a strange habit of rewarding ideas that sound ridiculous before they become obvious. Every legendary stock followed this exact pattern. Before becoming giants, they were doubted. Investors laughed at companies selling books online. They mocked electric cars. They ignored streaming services. They underestimated artificial intelligence. Every great success story begins with this belief. That's why the dream of a stock reaching $500 is so powerful. It isn't just about money, it's about being right before everyone else. But the real battle has nothing to do with the stock price. It has everything to do with human psychology. Picture a young investor sitting in a small apartment late at night. Multiple charts glow across 3 computer screens. Coffee sits untouched beside the keyboard. Every earnings report has been read. Every interview with the CEO has been watched twice. Every financial statement has been highlighted. While the world sleeps, this investor is building conviction. Friends call them obsessed. Family thinks they're taking too much risk. But inside their mind, one number keeps repeating like an echo: $500. Still, conviction alone has never moved a stock. Then something unexpected happens. The company reports stronger than expected earnings. Revenue jumps higher than analysts predicted. Customers keep coming. Profit margins improve. Suddenly, institutions begin paying attention. Hedge funds quietly build positions. Large investment firms increase their ownership. The stock begins climbing. 10% becomes 20. 20 becomes 40. News channels finally notice. Social media celebrates every new high. Confidence spreads faster than facts. But nobody could have predicted what came next. The internet has completely changed investing. Years ago, ideas spread slowly. Today, a single post can reach millions before the stock market even opens. A viral tweet becomes a buying frenzy. A YouTube video creates thousands of new investors overnight. A famous investor mentions one company, and billions of dollars suddenly flow into its shares. Information moves at the speed of emotion, and emotions move much faster than logic. At first, everything feels easy. The stock keeps rising. Investors refresh their brokerage accounts every few minutes. Green numbers create excitement unlike anything else. Suddenly, people who never cared about investing begin asking questions. Should I buy? Is it too late? Can it really reach $500? These conversations happen in offices, restaurants, family dinners, and coffee shops around the world. Success creates attention. Attention creates momentum. Momentum attracts even more buyers. But momentum has a dangerous side nobody likes talking about. Greed quietly enters the room. It never announces itself. It whispers. Buy a little more. Don't sell yet. Imagine how rich you'll become. Small gains no longer feel exciting. Investors who doubled their money refused to sell because they believe they can triple it. Risk slowly transforms into confidence. Confidence slowly transforms into arrogance. This single emotional shift has destroyed more fortunes than almost any market crash in history. Meanwhile, the company itself continues growing. New products launch successfully. Customers remain loyal. Expansion into international markets exceeds expectations. Analysts begin raising their price targets. Financial television starts using words like unstoppable and game-changing. Suddenly, that impossible target of $500 no longer sounds ridiculous. It sounds realistic. But the higher expectations climb, the harder reality becomes. One earnings report changes everything. Revenue still grows, profits still increase, the company performs better than most businesses could ever dream of. Yet, the stock falls anyway. Investors stare at their screens in disbelief. How can a company report fantastic results and still lose billions in market value within hours? The answer isn't hidden inside the earnings report, it's hidden inside expectations. Markets don't reward good companies, they reward companies that exceed impossible expectations. If investors expect perfection, even excellence can look like failure. This lesson arrives without warning. Fear replaces greed almost overnight. Financial media suddenly changes its language. Yesterday's future market leader becomes today's overvalued concern. Analysts who praised the company weeks earlier begin lowering targets. Social media fills with panic. Every tiny negative headline feels enormous. Investors who felt like geniuses just days ago suddenly question every decision they've ever made. What happened next shocked everyone. Large investors began quietly buying more shares. While retail investors sold out of fear, experienced professionals studied something different. They ignored headlines, they ignored emotions. They focused on cash flow, market share, competitive advantages, and long-term demand. They understood something most people forget. Great companies rarely move upward in a straight line. Every legendary stock experienced painful corrections before reaching extraordinary heights. But there was another problem growing beneath the surface: competition. No company dominates forever without attracting challengers. Rivals began copying products. New startups promised better technology. Industry experts predicted slower growth. Government regulators started asking difficult questions. Suddenly, the future looked less certain. Investors faced an uncomfortable truth. Even the greatest companies must fight every single day to remain great. The CEO now carried enormous pressure. Every public speech influenced billions of dollars. Every product announcement created impossible expectations. Every interview was analyzed word by word. Leading a fast-growing company isn't just about building products anymore. It's about managing belief. Investors don't simply buy businesses, they buy stories about the future. Then came the biggest mistake. Many investors stopped asking whether the business was improving. Instead, they only asked one question: will it hit $500? That simple change destroyed their ability to think clearly. Price became more important than value. Excitement became more important than evidence. Hope replaced analysis. History has repeated this mistake again and again. During the dot-com bubble, investors believed every internet company would dominate the future. During cryptocurrency booms, people bought coins they couldn't even explain. During housing bubbles, buyers believed prices could never fall. Every bubble begins with one dangerous belief: this time is different. The market rewards those willing to do the opposite. But even now, the question remained unanswered. Would the stock actually reach $500? The answer depends on something far bigger than hype. A stock doesn't magically become worth more because thousands of people want it to. Eventually, every company must justify its valuation. Revenue must grow, profits must expand, customers must stay, innovation must continue, management must execute, competition must be defeated. The business must earn that higher price. If those pieces come together, extraordinary gains become possible. If they don't, dreams stay dreams. This is why professional investors spend thousands of hours studying businesses instead of chasing headlines. They're not trying to predict tomorrow's price, they're trying to understand tomorrow's company. There's an enormous difference. One focuses on speculation, the other focuses on ownership. Imagine two investors buying the exact same stock. The first investor refreshes the chart every 5 minutes. Every drop creates panic. Every rally creates excitement. Their emotions move with every candle on the screen. The second investor checks earnings reports every 3 months. They study products, they analyze competitors, they understand the business. Ironically, both own the same shares, but only one sleeps peacefully. Markets reward patience far more often than prediction. Then came another surprise. A major institutional investor disclosed a massive position. Financial television exploded with speculation. Social media celebrated. Retail investors rushed back in. Volume surged. The stock climbed again. People who had doubted the company weeks earlier suddenly became believers. Nothing had changed overnight except perception. That's how markets work. Reality moves slowly. Narratives change instantly. And narratives often move prices long before fundamentals catch up. Still, experienced investors remained cautious. They knew the journey from today's price to $500 would never be smooth. There would be corrections, unexpected news, economic downturns, interest rate changes, political uncertainty, competitive threats. Every great investment story includes moments where holding feels impossible. Those moments separate conviction from speculation. One day, perhaps years from now, that magical number of $500 may finally appear on trading screens around the world. Or perhaps it never will, because no one, not analysts, influencers, billionaires, hedge funds, or television experts, can guarantee the exact future of any stock. The market has humbled the smartest people on earth. It has embarrassed Nobel Prize winners. It has bankrupted billionaires. It has rewarded ordinary investors who simply remained patient while everyone else chased excitement. That's the paradox of investing. People spend their lives searching for the next stock that could multiply their wealth. But the greatest advantage isn't finding the perfect company. It's developing the discipline to think differently from the crowd. Fear tells you to run. Greed tells you to chase. Wisdom tells you to understand. The real opportunity was never hidden inside the number $500. It was hidden inside the questions people forgot to ask. What problem does this company solve? Can it keep growing for years? Does it have a durable competitive advantage? Is management trustworthy? Are customers becoming more loyal? Those answers matter long after today's headlines disappear. Because fortunes aren't built by guessing tomorrow's stock price. They're built by recognizing extraordinary businesses before the rest of the world finally understands what they're worth. And sometimes The biggest risk isn't buying too early. It's spending years waiting for certainty, only to realize that certainty arrived at $500.